Hey traders, it's not only tariffs on the radar, but things could get even messier in the coming sessions. A potential government shutdown in the US could play out if Senate Democrats reject Republicans' funding bill this Saturday. And that's not all. Eyes are also on Moscow. US officials head there, waiting to see whether the Russian President Vladimir Putin will accept the 30-day ceasefire agreed between US and Ukrainian officials. So a couple of moving parts, and this video I have decided to break down three key markets: the US 500 index, or otherwise the S&P 500 index, gold, and Bitcoin. So let's start first with Wall Street and the US 500 index. And looking at the chart, at the daily chart, we can see that the painful sell-off has paused around the 5,570 level, where this falling line from July is placed. The 50% Fibonacci retracement of this upleg over here that started from April and post near the record high of 6,138 is also within the same region. So that creates some optimism that perhaps some recovery or some stability could emerge in the coming sessions, especially as the RSI and the stochastic indicators down here are fluctuating near their oversold levels. So that increases the chance for a rebound or some consolidation, but a real bullish action could emerge above the 5,670 level and above this above this support turn resistance trend line, which blocked bullish actions yesterday. So a close above it and beyond the 38.2% Fibonacci mark of 5,670 could potentially drive us up to the 200-day moving average at 5,760. This also coincides with the neckline of this bearish double top pattern. So it could be a symbolic level, a break of which could confirm additional gains towards the 5,835 level, where this longer term former support trend line coming from 2023 is placed. There's optimism for a rebound. However, if the sell-off continues below the 5,570 and 5,535 region, then we could see another aggressive decline, potentially towards the 5,390 and 5,440 constraining zone, while lower than that, the 5,320 territory could also act as support, as it did back in August. That area was also a former resistance zone, so that could be another reason to keep a close eye on this territory if indeed we have stronger bearish sessions. Now looking at the gold, unlike the US 500 index, is gaining fresh positive momentum today. It's already very close to its record high of 2,954, and questions are now emerging whether we will finally see new higher highs in this market, new all-time highs, and if that happens, perhaps gold could hit a new peak near the 2,985 zone, where this short-term resistance line is located, as well as this support line over here from January 2024 is also positioned in the same zone. Additional increases from here could take us up to the 3,125 level. There's another ascending resistance line coming from April 2024 in the same zone. So that could also be in focus before we head towards the 3,075 and 3,100 territory, where another broken support trend line is placed. Well, from a technical perspective, however, I wouldn't rule out a pullback as the RSI has yet to rise above this resistance line over here. The stochastic oscillator is also very close to its 80 overbought level, so some caution is necessary. Now, if the price reverses lower and falls back below the 2920 level, which had been acting as a key barrier to upside movements in the previous sessions. Then we could see a continuation lower to 2890. There is an ascending trend line over here, which helped the price to pivot back in February. So that could buffer downside movements. If not, then the focus will turn to the 2855 territory, where the 23.6% Fibonacci retracement of this block is also located. Then below that, I would also pay attention to the 2790 zone, because this is where the price almost peaked back in October 2024. So failure to hold here would downgrade the broad outlook, likely causing more declines. And if the 2750 and 2770 zone fail to hold, then the focus will turn to this key ascending trend line from June 2024, as any declines below this trend line would further worsen the market outlook. And finally, looking at Bitcoin, Bitcoin has recently closed below its 200-day moving average, sending some bearish signals into the market. But the 50% Fibonacci retracement of the uptrend that started from April 2024 managed to support the market near 79,140. The 200-day moving average remains a key barrier near the 83,650 level. So unless this line gives way, downside movements could persist, downside pressures could persist, particularly as both the MACD and the RSI down here continue to fluctuate within the bearish territory. The MACD is still below zero and slightly beneath its yellow signal line. The RSI is also comfortably below 50, so that suggests a bearish bias. And if the 200-day moving average manages to block upside movements, then the focus will turn back to the 50% Fibonacci mark of 79,140. The lower boundary of this bearish channel is also nearby, so if that fails to hold as well, a sharper decline could emerge towards the 61.8% Fibonacci retracement level of 72,167. Then below that, the 67,000 territory has been also a former constraining zone, so that could be the next target on the downside. Now, if the price manages to close back above the 200-day moving average, then I would pay attention to the 38.2% Fibonacci mark of 86,115. The 200-day moving average is approaching that zone, so if we close above this resistance, the recovery phase could extend towards this resistance trend line seen near 90,500. A successful penetration here could then take us immediately up to the 23.6% Fibonacci of 94,750. The 50-day moving average is also within this zone, and we saw the price facing a strong decline here back at the start of this month. So if we successfully overcome this wall as well, that could add more bullish fuel into the market, likely helping the price to climb back above to 99,500 level. And then above that, the 100,000 territory could attract attention, with the 102,500 level coming first into view ahead of the key barrier of 106,500. So that's everything I wanted to share with you guys. If you liked my video, please subscribe to this channel. All our analyses are uploaded in our market analysis page in our website. So if you need more information, you can find our analysis there as well. So thank you for watching and see you next time. Bye bye for now.